Hello everyone. What if I tell you the stock market's biggest wealth creator is not just profit growth but a double engine that pulls your stock price upwards? That's double engine is EPS growth plus PE re-rating. EPS is simply net profit divided by number of shares and PE is what price divided by EPS. So when a company's earnings per share keeps expanding and at the same time the market gives it higher valuations by re-rating the PE upwards, that's when you see multi-bagger returns. For example, if you buy a company at PE of 10 and it goes to PE of 20, so it's doubled and EPS grows from 2 to 4. So again, EPS has doubled. So you have got 4 bagger in your hand. That's how if you have got companies or if you have identified your companies where PE is low, growth is intact, ROE, ROC is brilliant, management is consistent, they are trustworthy, then as an investor you need to look upon, can this company get me some multi-bagger returns in the next 10 to 15 years. Multi-baggers giving in almost 2 to 3 years or maybe 5 to 6 years is a rarity. Very few companies can achieve that. If you are into US, then obviously that's a different story, because in US 30-40% you see 30-40% of an upside downside in a day, not even in a week or a month. So coming back to the topic, but remember, not every low PE stocks becomes a multi-bagger. The business model, again, as I said, should be strong. All the various metrics that as an investor should analyze should be picture perfect, and the valuation should be intact, growth should be consistent. If you have got value at such a cheap level plus growth is consistent, I think you have got a multi-bagger in your hand. And yes, the other story also mounts to it: P de-rating plus EPS degrowth. At the same time, you have got P re-rating plus EPS growth, which gives you a double engine growth model. At the same time, P de-rating plus EPS degrowth, it's like you have thrown a stone into the water. That's when the whole uh, your portfolio or your stock starts collapsing. So as an investor, always track both EPS and PE. And yes, double engine growth makes fortune, but at the same time double engine decline can even erode your wealth. So the difference is understanding the business model and having the patience to hold the right ones. Thank you.